Hey guys, what in the world is going on with this market? It has been all over the place since Thanksgiving. This is the Thanksgiving kind of sell-off down here. This is the ES, the chart of the ES, the SP 500 futures. So coming into Thanksgiving, we were doing all right and rally up to 6,900. Remember, this is ES. It's a 20-day chart. And then we just kind of fell off the cliff. We came back down, touched our voodoo snow line, bounced back up, took it out. Okay, well that's a blip. We're going to get going. And then we came back down here and from 6,900 to 6,500, almost 400 point drop. And then we're off to the races. We're back up here, and now we have gotten into this chop zone here. This is really what's been driving me nuts is this kind of back and forth, get going a little bit and fail, and get going a little bit and fail, and get going and fail, and get going. It's a pattern, right? Now I do think we break out of here, and I'm going to show you why in a minute, and we'll look at where we think this is going, and then this market's going into the end of the year, and then we will look at a couple of names that look pretty interesting right now. So first of all, if you don't know, I'm Bruce Marshall from Simpler Trading. Welcome, glad you are here. So let's go out here on a 1-year chart of the ES, and things aren't as bad as they sound, I guess, and maybe I'm not sounding that bad, but we're still at 68.60, and 69.50 is the all-time high, so we're not very far, and I think we get there actually very soon. So what makes me think we're going to get there soon, and how do I know? Well, I don't know for sure, but we have to do a little detective work. And first of all, let's look and see on our economic calendar. Always check that. And I've got it on November. Sorry about that. Let's go to December here. And tomorrow is December 5th. We were supposed to have payrolls. I'm pretty sure they are, but I'm not 100% sure because the government shut down. I do know that we get PCE, personal consumption expenditures, and the Fed really watches that. Speaking of the Fed meeting, that's what's going to turn the market right there on December 10th. I think a lot of this is in anticipation of the Fed meeting and a rate cut. So along our detective lines, we know what's coming up in the next couple of weeks. So what makes me so positive of what's going on with the Fed? Well, here is our Fed Watch tool. Next Fed meeting, 5 days, 23 hours, 46 minutes, and 40 seconds, right? This stuff is tracked to the second, actually. But right now, current target rate is 375. There is an 87% chance of a 25 basis point cut down to 350. There's a 13% chance that they don't do anything, right? I'll go with 87%. That's a little bit more than 13%, right? So that gives me pretty fair amount of confidence that we're going to get a rate cut of at least 25 basis points, and that will send us up here, take out that all-time high, and voila, there's 7,000. So let's look at our Fibonacci levels here. I've got different charting service here that I use, and as you can see, SPX daily, we do have a lot of resistance. This is what we've been going through the last 4 or 5 days, and there's that Thanksgiving low, or a little pre-Thanksgiving low. We've got a lot of resistance to get through. We got to get through all this stuff, and when we do, there'll be target 1 up there at 7028. There's 7,000. This is SPX, right? I'm targeting 7,000. I've had trades on to target 7,000 for 3 months probably, just kind of getting ready in anticipation of this happening. So far, so good, right? So that's my target, SPX daily. What about a weekly chart? Now I like weekly charts. You get a lot more information here. Bigger time frames. The shorter time frames are more accurate, I suppose, if you're doing day trading and stuff like that. But SPX weekly, now we have a larger swing target number 2, right? So there's target number 1, 7028, target number 2, 7166. And what's even better, look at all of this support that we have to go through. So in other words, if we're going to go down, we've got to go through all this stuff. That's very helpful, it's very positive, I suppose, to give us support to not roll over and crash and burn, and to then go higher. So what else do we have? Again, we're doing detective work here. So let's go to SPX, and I want to start by, I can even tell you probably when it's going to get there. And let me show you how. So let's go 31 December, end of the year, you know, in 27 days, 31 December. So I'm targeting 7,000 because of all the reasons that I said. And check this out. Voila. There is 68,000 contracts here. Now this is open interest here. Open interest. There's 1,800 been traded today, but there's 68,000 contracts out there sitting at 7,000, and I'm pretty sure those are not sold. I'm pretty sure those are bought in some form. They could be part of a trade. They could just be straight up calls. There's a lot of things. I've actually got some butterflies up here, so you know, part there and part up here and part down here, you know, that kind of thing. So that makes me feel fairly a lot more confident that we'll get there by the end of the year, but I think we'll get there sooner than that, and I will show you why. If we go back here to 19 December, the AMs, not the weeklies, but use the AMs, that's where the liquidity is. And let's mosey on up here to 7,000. Voila. Well, 162,000 is more than 68,000, right? I think we're going to get there much sooner. And it's just because of the Fed rate cut and the market gets happy, and then we get the Santa rally, maybe comes in a little early. I think the Santa rally might come in early. The January effect might be coming a little early this year, perhaps, but there's already 23,000 traded today, so much more emphasis is being put here. You can see there's 136 over here and 20,000 over here, and you might be thinking, well, these are puts. Why in the world would anybody want to do that? And they would do that for, I'll show you real quick. It's pretty interesting. So that's a straddle. And again, 20,000 on both sides today. 23,000 there, 20,000 there. So what people are doing, if you wanted to do something like this, there's actually one for January out there as well, I looked at. But so a straddle, your long calls on one side and your long puts on the other side. And why in the world would you do that? Well, if the Fed doesn't cut rates, say, or they say that's it, that's 25 basis points, that's it, that's all you're getting, and the market goes down, well, this wins. Yay. And say we've got 10 contracts over here and we've got 10 over here, and it starts going down. You take one off this side and you add one to this side, and you take another one off this side and you add it to this side. And so now, and you keep going, now you got 12 over here and you got 8 over here, or 7 or 6 or what, so you can work this thing as it goes. What if it rips higher? Now you do have, I call this the sea of death, the valley of death right there. You don't want to end up there in your trade, but that's at expiration. But if it goes higher, then you're buying this stuff cheaper. So you buy another, buy another, buy another, buy another, buy another. And now you got 14 contracts long, and you've taken them off here. Now you've only got 6 short, and you can end up turning that thing into, you could go to 0 here and go to 20 over here, that kind of thing, and turn that thing into a long call and have a good trade. You have to work the trade, and you have to be fast, and you have to have a lot of money because those straddles are not cheap. But that's the reason that you see that on both sides. And someone asked me that the other day, and I wanted to make sure I explained that. So anyway, that is what I think is going on here. If you look out, we'll do one other real quick. If you go out to January, and again use the AMs here, and you'll get a lot better idea of what's going on, and you'll see up here at 7,000 there's another 64,000 there. So that 31 December and this 16 January, that could be a 7,000 call calendar, but I don't think so, because one, you see this 51,000 over here, this, and there 6,000 here today, 6,000 here today, right? These are being added on as we speak, right? On both sides. So I don't think that's a calendar. I think it's straddles or versions of straddles or parts of trades. Maybe it doesn't have to all be one trade. So anyway, that's pretty cool. All right, let me jump back over here to our charts, and I want to look at a couple of names. I'm trying to keep it short for you guys. Just some things that look pretty interesting. There are, of course, the Mag 7s, you know, they always look good and all that kind of stuff. I'll show you, we'll go through them real quick. I do like Apple. Apple looks great here. I think we're pulling back into 34. Nice run up here higher, probably into 300. You know, maybe if not by end of the year, maybe by, you know, we've got earnings coming up, right? Out here, earnings will be, this is from last year, 130.25, so it should be around 130.26 when the next earnings comes out. You know, here's the each quarter, right? The next one, of course, I am long Amazon. I like it. It's great. Even here, I might add to it. Looks good. But I want to give you some different names. Go to a financial like American Express. Looks pretty good. Now these may have already moved a little bit ahead of an interest rate cut because financials do better, right? Small caps do better. We could look at IWM. Looks good, that type thing. So I like American Express. I like Chubb. Right here. Looks pretty good. If my chart will load, there you go. Nice looking. Got a dividend coming up if you're buying the stock. But let's go on down the list here. Lamb Research, great company, great stock. I've been buying this stock for many years. Great company. Maztec here, another one that looks good. It looks like we're about to take out this high again. All these are assuming that the market goes up, and obviously the Fed doesn't say something or do something contrary to that at this Fed meeting next Wednesday, right? And lastly, if you say, you know, Bruce, I can't, my account's not big enough or whatever, I don't want to buy. How do I choose the Mag 7s? They're also expensive. Well, buy the XLK, right? This is the tech ETF. So in the tech ETF, it is, and I'm ballparking here, about 14%. Top three holdings, number one is about 14% in NVIDIA. I think about 13% in Apple and about 12% in Microsoft. And then the fourth one I think is about 6% in AVGO, Broadcom. So that is your basket of all of those stocks. Great, you know, if you want to get some representation there and just pick one, you know, that's it. You could look at SMH too, but I like XLK here. And again, XLF, if you want to look at the financials, pretty interesting. Probably going to break out here and go a little bit higher. I'm not as confident in this as I am the XLK here for the tech stocks, and that would be just good long-term hold. You know, you could buy that, write covered calls on it or whatever, sell naked puts. There's lots of cool stuff you could do with that, but that's for another video, right? So if you have questions on any of that stuff, certainly let me know. I am at Simpler Trading. I have a room called the Bias Room where we talk about these trades, and I post trades and stuff every day. I'm in the main room. We have a lot of great content providers, great traders there that'll help you. So come join us, come check it out. I'm sure there'll be a link at the bottom of this video for it. And with that, I will say, you know, let's just be careful with this market until we get the Fed meeting next Wednesday, again, Wednesday, 2 o'clock Eastern. And after that, we should be good to go. And looking for 7,000 into the end of the year. So thanks for your time, guys. I appreciate it. And if I don't talk to you before, have a great rest of the month and have a very Merry Christmas if I don't talk to you before, but I'll be doing another video between now and then. So thanks for your time. I appreciate it. Take care.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me